Financial Planner, Flow on YouTube.
The Fed falls apart as the system deteriorates further. Let's get into the economic collapse financial news. Now, as we know, since 2008, the Fed has been blowing up bubbles, and they've been trying to convince us that the economy has improved. And I think we've gotten to the point where everyone out there who's not listening to the alternative media, who hasn't been listening to me or many other people, they do feel very comfortable. And this is a very scary situation, because once they get you into that comfortable state, that's when they pull out the rug from under you. And we are definitely headed into that situation. Now, we mentioned how the brick and mortar, the retail industry, is taking a beating. And this is because people just don't have the funds to go out and purchase goods, which means a lot of stores are closing down, which means there's going to be a lot of space available, which also means we're going to have a huge amount of problems in the commercial real estate market. Now, the Fed, they are worrying about the commercial real estate market, and you're probably scratching your head, well, why do they care? Because the reason why they care is because the banking, the U.S. financial institutions, they hold about $4 trillion of commercial real estate loans. And they're very worried about what is happening, because what we're seeing right now, we can see from the Green Street Property Price Index, which measures values across the 5 major property sectors, it has soared to 107% from May 2009 to the plateau that began late last year, and 27% from the peak of the total crazy prior bubble that ended with such a spectacular fireworks display of everything completely falling apart. But it is now turned around. It is dragged down by a plunge in prices for retail space. The CPPI by Green Street Advisors dropped 1.1% in October from September. Now, in terms of points, the 1.4-point decline was the largest monthly decline since March of 2009. The index is now below where it had been in June of 2016. And if we go back to September 2007, well, we hit an index of about 100 and everything turned south. We are now at an index of about 125 or so, and we are turning south once again. And this is going to be a huge problem because, again, the U.S. financial institutions, they hold nearly $4 trillion of the CRE loans. And of them, $1.2 trillion are held by smaller banks, less than 50, which these banks have less than 50 billion in assets. And this is going to be a huge problem, because when everything starts to fall apart, well, the banks are going to be on the hook for all of this. And we know that the brick and mortar retail space is getting crushed. The index for strip retail fell around 5% year over year. The index for mall prices plunged by 6% just the month of October from September. This was a huge move in just 1 month, and are down 11% from a year ago. And what we're seeing right now is that it's all falling apart. Now, when we look at different areas like the self-storage sector, this was the hottest sector of them all. It had surged around 180% since the financial crisis. Well, guess what? It's not surging anymore. Prices are down 3% year over year. Lodging took a 12% plunge that started in 2015. It never recovered. It's continually plunging. The apartment sector is still hanging on by its fingernails. The office sector, well, that growth has slowed. And we've talked about that before, where out in California, where they're building a lot of office space, they just are not filling it up. And we're running into a huge amount of problems. Now, the big banks, they're going to be on the hook for all of this, because we understand that they have their hands in real estate, in commercial real estate, and they've been doing something very tricky with real estate loans. Banks are far more exposed to risky real estate loans than everyone thinks. And the reason for this is because they've been using this loophole in the regulations. instead of lending to construction projects directly, they increasingly lend to debt funds and mortgage trusts managed by private equity firms, which in turn lend to developers. Ultimately, the banks are still bearing some of the risk for construction projects and real estate acquisitions, but since on paper they are merely buying securities or extending supposedly low-risk credit lines to giant fund managers, they can often avoid the stringent limits on how much they can lend against real estate. Now, banks have become much more sophisticated in extending credit lines to private funds, including debt funds. And now banks have whole departments focused on it. And this is the rise of sideways lending. And this is going to be a huge problem down the line. Now, why do banks do this? Well, regulators set limits on how much real estate lending a bank can do relative to its shareholder equity. If it exceeds these thresholds, it has to hold a larger capital buffer to insure against losses. Guess what? Since they've been going around this, they haven't been doing this. Now, we've seen this before, subprime security, and we're seeing it once again. So there's going to be a huge problem going down the line. Now, why does this matter? Because the regulations, they were designed to keep them out of risky real estate lending. But they're using this sideways lending, and they're getting around the regulations, but they're still at risk. So when everything starts to implode, the banks are going to go down because guess what? They don't have the capital. It's going to be a complete and utter disaster. Now think about this for a second. The Fed still has about $4.5 trillion on their books. A lot of it is risky real estate, toxic real estate, I should say. And when we look around the country, the commercial real estate, the homes that these investors, these speculators, these foreign investors have purchased, when they start to go down in value, this is going to be a complete disaster. And we can see already with strip malls, regular malls, this is already a disaster, and the banks are going to be on the hook for all of this, which tells us that we're going to have major problems ahead of us. We're doing the same thing that we did back in 2008. We're looking past the headlines where the banks have passed their stress tests. Everything is fine. Don't worry about it. And we've just looked beyond that, and we see what the banks are doing. Go back prior to 2008 when people looked inside the subprime securities and said, well, wait a minute. This person owns 4 houses and they're defaulting on all of these. This is going to be a disaster. We're doing the same exact thing, and we're pointing out all these different problems. And when one thing goes down, it's going to affect everything else. And we could see right now that those in the central banking system, the Fed, well, a lot of these individuals are starting to flee. They're starting to, as they call it, retire, resign. And we see Dudley right now, he's quitting. There are 5 vacancies on the FOMC. And it looks like Trump is, nominating someone. But we need to understand that this is going to be a disaster because the New York Fed president, William Dudley, well, his term was a 10-year term and it expires in 2019, but he's getting out now. And we need to remember something very important. Trump doesn't get to appoint Dudley's replacement. This decision will be made by the New York Fed's Board of Directors and will have to be approved by the Fed Board of Governors, which Trump will have an opportunity to load with his appointees. So when we look at this, we have to wonder, is Trump going to shake things up, or is he going to keep the status quo? Because we understand that he has Andrew Jackson hanging in his hall. He changed the curtains to gold, and we know what Andrew Jackson did. It ripped apart the Fed. It pretty much he got rid of it. He got rid of the central banking system. And is Trump going to do the same thing? Now we're going to have to watch and see. And we know this is a process that takes a little bit of time, a little bit of maneuvering, because we understand over the many years, the deep state, the cabal, they have been intertwined into the system. But we can see they're losing power right now. Now, of the 7 slots of the board, only 4 are currently filled. 3 are vacant, and the 4th slot might become vacant if Janet Yellen decides to leave. And I believe that these people are going to leave because they know what's going to happen. The entire system is deteriorating right now. And we see those who built the bubbles up, those who've been in control, they don't want to be around when the whole thing completely falls apart. And what we're seeing right now is a lot of these individuals saying, okay, it's time to remove ourselves. And hopefully Trump does the right thing and gets rid of the Fed and removes it or takes control of it where it's no longer a private Western central bank. Actually, this is what Putin did out in Russia. And this is why the central banking system and those in the cabal don't like Russia right now, because he's controlling what happens with their central bank in Russia. And Iceland has done it. Actually, any country that is not controlled by the private Western central bank, or the country doesn't listen to the private Western central bank, they are automatically the enemy of the central banking system and the cabal. And this is why we see all of this happening around the world, like Iran, we see it with Russia, we see it with Venezuela, and all these things, because they want control of the natural resources, they want control of the country, they want, a puppet regime in there. And we're seeing right now, as we move forward, that as the system comes down, they already know that this is a house of cards. They know that this, once one thing goes, the whole thing starts to fall apart. And this is what we're seeing right now. We're seeing everything fall apart. We're looking inside. We're seeing what damage is going to occur when the system comes down, and it is going to be a complete and utter disaster. And we've been looking at this for quite a while, and we can see that everything is connected. And everything that we pretty much said, how people don't have the funds, people are getting laid off, retail is going to take a hit, the housing market is going to start coming down. We talked about the GDP numbers, the unemployment numbers, and the rest. They're all fake, phony, and false. And again, we're getting to a place where people are believing, and I'm hearing people around me, that the economy is doing absolutely perfectly. I can't believe how well it's doing. The unemployment rate is so low. Everyone can find a job. And if you actually look for a job, it's not as easy as everyone thinks it is. Of course, when you have a job, you don't realize it because you're not looking for one. It's like having a house, saying, oh, it's so easy to sell a house. And if your house is not for sale, how do you really know? Why? Because you hear other people saying it. You hear the corporate media saying it. Try to sell your house. Try to get what you think you're going to get outside of the 20 cities. And most of the people are going to have a very tough time. I see houses around the area where they're still on the market. Three or four of them where I am, they're just sitting there. No one's even coming to look at them. So we can see right now the whole system is ripping itself apart. The central bankers are getting out, and we can see right now it's up to Trump. Maybe he'll do the right thing, maybe he won't. We don't know at this point, but we'll have to wait and see. But the people here, when the time comes, when the system falls apart, we have a choice. The people need to start speaking up. The people have to say, we don't want a central bank anymore. And we need to make a change. Changes have been made in the past by people banding together, saying, let's make this change. Well, we're going to have to band together. We're going to have to make a change. This is why we need to spread the word out there. We need everyone to listen. We need everyone to understand what is going on here. We need everyone to realize that the entire system has been taken over by these central bankers, and we need to remove them from the system, and we need to put it back into the hands of the people. And no matter what, the system is going to come down. It's not a matter of if, it's a matter of when. Once they completely lose control, other countries lose faith, the people lose faith, the whole thing is going to come down, and it's going to be a complete and utter disaster. This is why you need to be prepared.